Happy weekend, everyone. I kind of want to talk about some of the biggest trades I took last week, and what I saw and why they worked, in my opinion, and then kind of where the market state sits now. So I think the biggest moment last week was, and we posted this earlier, so if you're in the Discord or even if you're on X, I shared it on there, but I did a comparison chart of the dot-com bubble versus this big collapse, Korea collapse. And this is actually about a 50% retracement on the fibs, catching the weekly support with a nice turn on the daily. So when we got really dramatically oversold here, I started looking for a dip actually. And remember, it was into that big FOMC event. So I actually hedged into that event with Apple at the same time. My thought was if tech bounces and I'm right, if tech up, then Apple should go down as people sell, take gains, and chase things that are moving. And if market goes down and crashes, I didn't think a rotation would hold in the current market environment, and I thought Apple would crash with it. It wasn't just that thesis, though, because really what we're seeing here is a lack of confirmation on the highs. So we're hitting meaningfully new highs on Apple while RSI is steadily trading to the downside. These often create really great short entries. So I actually took a few attempts on Apple and we made some minor returns, but we were keeping a really tight stop. Then when we got super extended, actually here at 343 is actually where I sized up pretty meaningfully, which was almost a top tick of the high. We ended up creeping a little bit into 344. But then obviously we took some pretty major profits for 50 to 70%. And then 780% when it failed on earnings. Ended up catching some support here, but it's important to note that looking forward for this stock, we just cracked the 2-day and we've already cracked our weekly. So a major retracement could be inbound for the stock after that earnings. After that kind of disappointing, volatile earnings, and this company's got a lot of decisions to make. They're getting pressure from the government to not use Chinese chips, but they're also getting their margins swallowed. So are they going to raise prices and hope the consumer comes to meet it, or are they just going to swallow the margins and get collapse on the stock? It's a big decision for them to make, and this is a very greedy company that might try to pass it off to the consumer, might hurt their sales. It's a lot of unknowns there. Market doesn't like those unknowns. But yeah, so that set up the pair trade. Pair trade short Apple, long tech was kind of the thesis going into that. So I try to diversify it a little bit by looking for some alpha and individual names, those mostly being SKHY, dramatically oversold here on the daily. And I know this earnings sell-off was big, but honestly, I thought this earnings was really nice. I think this trade I would have taken a lot more size, quite honestly, if this had been more of an exhaustion candle. So if the body of this had been up here, I probably would have taken a lot more size. But just given where the state was and what key fib we had hit on EWI, I went ahead and took it anyways. Same thing with MU here. I actually really likes the MU structure. Again, we're seeing this turn on the daily, and I believe this one actually had created some great support on the 2-day. I thought it had also flipped on the 2-day or turned, not flipped, on the TTM as well. So I was just looking for a short-term bounce on these, quite honestly. So for the daily, when we were down here, I was actually just looking for us to get back to this EMA convergence. And I think here's a big decision moment of whether or not we can actually make an attempt to new highs, which would kind of solidify this as a pretty major low, or if we're going to do some more chop kind of in this larger range, which is kind of where a lot of stocks sit right now. Like NVIDIA now has created this double bottom, but it isn't giving me the momentum signals that you'd really want to see at a double bottom. The 2-day has a potential flip that could come here, and keep in mind where that daily sits, that can flip with ease too, especially if you don't have a second candle confirmation. But the weekly here is still not looking great, right? Typically in conditions like this, it means we're set up for chop. So the video could be a bit harder to play until we actually get earnings, and then maybe you'll see a trend confirmation there for that name. Overall, the market's really tough, and it really comes down to TLT putting us in a very awkward position where usually when bonds are visiting us at these historical lows, we're usually finding equities catching a lot of weakness. And a lot of that comes down to, if you're a big money institution and you have the option to buy, a lot of these names are at discounts, but they're still pretty expensive on historical terms. If you're not a believer in the AI story, are you really going to be looking to buy up tech stocks? Are you looking at bonds right now saying, hey, I can lock in, 8, 10, 12% long-term with no risk? it's not a decision I would make, but it's a decision that a lot of people would make. So they sell their equities and they lock it in bonds and they say, well, that's the market average over, multi-decade time frames. So lock it in because we've had a few hot years. So that's really the decision factor that goes into this and why we might see a larger reaction out of equities. The backdrop also was we had the situational awareness hedge fund that blew up. Citadel bought them, caught this huge bounce on, NBIS, I think, was one of the largest holdings in that fund. So they bought them up and you get this major exhaustion. But even with this major exhaustion, keep in mind we're on a monthly chart, this still looks pretty ugly for a monthly chart. So you really got to pay attention to the weekly and to the daily here to show us some real turns, right? So we got that nice bounce that we were looking for, but really this is still like a bearish trend line that's holding into Friday, right? Actually got a big rejection. So there's something you have to be mindful for, even though the TTM is improving. Now, if we do see some sort of significant turn, like I'm getting in the 2-day flip turn, rather I keep interchanging. To be clear, this is a turn and this is a flip. Okay, that's what those things mean. Even though I keep mixing them up, it's late night recording. That's what I mean by turn. That's what I mean by flip. Okay. But I do think that these names look really appealing, especially with the news that's going on. And, all this tech and all these people setting up local models, I think what they're going to discover is that they're still going to want, smaller local models to reach out to higher intelligent models. Because the construction of most AI operations is like brain and hands, right? Brain is frontier models. Hands are the smaller open source models that do most of the work, which save you on tokens, but still keeps the overall functionality of the operation to be like high level IQ and can solve pretty difficult problems autonomously, right? And given that that's the big operation, the thesis would be that these neoclouds become big winners. I think Microsoft did also a good job of getting the market turn. I do think one of the bear cases that deserves some recognition is the fact that Anthropic is such a huge player in this outperformance on earnings. It's a large majority of what Microsoft made this quarter from the Azure cloud. So you really want to see that start to diversify a bit over the next few quarters, or you want to see standout performance from Anthropic, right? Because right now there's key player risk where a large majority of your income is coming from two companies, OpenAI and Anthropic. So if there's any risk in those businesses or any fears that they go under, it's going to get really dicey. And OpenAI just lowered prices to try and compete against the open source models, but that really is a game to zero. So you do have to start asking the question, can this company's revenue keep up with that? So far, to keep in mind, I'm not trying to fear monger. They reported more income last month in July than they did last quarter. Okay, so the money is flowing in hand over fist. And Sam Altman himself said that he expects the rate of change in the efficiency and intelligence of AI over the next 6 months to be equal to the rate of change over the last 2 years. And if you think about it, AI has done crazy stuff in 2 years. And the amount of open source projects and different harnesses that people are making for these, it's a whirlwind for us who are like trying to stay on top of this as much. Like that's like a major part of our day-to-day operations is doing that, quite honestly. And even doing that every single day, it still is a whirlwind where it's like every single day someone comes up with something new that's a little bit better and a little bit better. And that's really just how you got to be if you want to be 3 months ahead of everyone else, which everyone who's been following us or reading the newsletter, like we've literally been 3-4 months ahead of the broader market, ahead of the curve and keeping up with the best new tech and everything. And then building that to our own app, of course. So that's like the polarizing dynamics is like you have the AI story, I think, fully intact. Definitely in a situation where if you're an enterprise, can you even afford to take a risk of not using AI in your business? Especially if you're a technology company, which keep in mind is the majority of US markets is technology companies. Can you afford to not pay for AI? Lots of people are making fun of the CEO of Google for saying that he'd rather go broke than miss out on AI train, and he was completely doing it. Well, okay with that being the case. and people were saying that that was irresponsible. I don't think that's irresponsible, because I think it's do or die. You know, if you are setting up to get wiped out if you sleep on this. And Apple, I think, might be okay because they're a hardware company, but we'll see how long that really lasts. I think we could see Apple start to get pretty aggressive pretty fast, or do some pretty massive buyouts if they think that their moat is in any danger at all. Because remember, this company still has a ton of cash to spend. And they haven't been spending it on share buybacks. They slowed down on that. So they're definitely waiting for a moment to act on something big and waiting to pull the trigger. They just aren't looking to get into the cloud compute and stuff like that. So I do think that that tells us, though, that overall there's still a massive appetite to spend, a massive appetite to grow, and a do or die mindset. And it's like, what you going to do? I wrote in that newsletter last week that, and some people interpreted it badly, but the idea I had was like, if you're a top tier athlete, if you're winning all these races, and then steroids get legalized, and all the other athletes go on steroids, and your team manager goes to you and says, "Hey, we just can't. We shouldn't spend the money on steroids because you're already a top dog, and so we're fine. Since you're already in first, it's okay." It's like, no. If everyone's on steroids now, then that's the new baseline to compete. And if I want to compete, I kind of need to do the steroids, right? The game has changed. Okay, this is no longer like an optional upgrade that you can choose to take. This is now the entrance fee to play. This is like your electric bill. You got to price in your tokens. You got to run your AIs, whether it's open source and you pay for the hardware to run in-house or whether you run it off the cloud. You got to have something. You got to automate something. You got to have these tools for your customers. There is no way around that. Okay, there's no engineer I talk to. There's no doctor I talk to. My chiropractor is using AI. Like, my physical therapist uses AI. Everyone's using AI if they are a top dog in their field. Okay, there's lots of people who say, I just don't believe in it. Okay, well, guess what? All the smart people do. So get with the program, because this is literally just the honest truth, you know? And I think that because this feels so much like a dot-com bubble, it's got a lot of people brain broken over it. And it's just not the same. It's just not the same. It's already here. It's already working. It already does incredible things at incredible paces. It's doing awesome things for us and for everyone I talk to. And when I talk to those doctors, those lawyers, those engineers, and I tell them, have you tried to set up a multi-agent framework for your operations that then, dictate tasks to certain models who are highly specialized? Have you gone the extra mile for that, where there's a fact checker and there's a task doer and then there's a researcher and they're like, oh no, I didn't even know that. Oh, okay. Well, guess what? That tells me that if there isn't massive innovations in hardware or the efficiencies that these can run at, which by the way, Kimi 3 turned out to be super expensive. So I don't think that China was quite the disruption that we initially thought. And GLM is already stupid expensive as well. So unless you do get those major innovations in hardware, you're not saving on tokens anytime soon. Your spend's still going to be through the roof, which is good for the frontier companies because it doesn't mean they're going to be priced out of the market. And I think it would be really hard to price them out of the market anyways, especially for higher order functions. So I still think that looking forward from here, probably the best alpha to be found is in biotech and pharmaceuticals to see what AI can do in that area of expertise, because genetics at the end of the day is just coding of the human genome. And so it's a really easy, if you're trained on this thought pattern, you can just pretty much plug and play it into genetics. And I think the market knows that from Twist, so we haven't seen massive innovations. But just given how often these models are surprising us and what they can even do, especially for CEOs of these companies, I mean, I guess you guys haven't been, if some of you haven't been paying attention, OpenAI broke out of its sandbox environment. So they had it training in an environment where it couldn't interact with the web. Well, it actually broke out of that, hacked multiple companies to get the answer key so that it could ace the exam, which is just mind-boggling. It was like, it wants me to ace this exam. How can I ensure I ace this exam? Well, I can break out of my sandbox and then go invade Hugging Face, right? And then the next thing that happens after that, of course, has been them posturing by going to the U.S. government and saying, hey, we're thoughts that are going through my head over the past several weeks of thinking about, is this a bubble? Is this not a bubble? Thinking about these events, what happens next? And it's just a wave of headlines, man. And you know, notice how I didn't mention the war or persistent inflation, because really that can cause some short-term market turmoil, but it's all by the dip moments as long as the AI story is alive. As long as the AI story is alive, you can have your turmoil, you can have a war, you can have a few wars, you can have persistent inflation, you can have the whole coot and caboodle, as I think the saying goes. And it does not matter. If the AI story is alive, there will be companies spending on it. Because again, this isn't like the internet where it's like an alternative, where it's like, oh, we did really well in retail. Now we can sell online and we can reach a wider audience. We have online. We can choose to have online communities. We can choose this all. No, this is, if you don't do it, you die. If you don't do it, your competitors will, and they will beat you with employees that never sleep, by getting tasks done even faster, by innovating faster, by creating new things faster, by implementing it into design and improving the efficiencies of their top engineers. Their top engineers will work twice as fast as yours because they have, 15 AI assistants, 25 AI assistants, 75 AI assistants. Some of these startups are running around with 270 AIs that they run, and they spend 15,000 tokens a day, but they'll build whole companies from the ground file for the patents, create the apps, the website, everything in a week. And they'll spend $250,000. But really, what is $250,000 to build a whole big company from the ground, from scratch in 1 week? So that's what you got to watch out for, right? So unless you're highly specialized in what you know, and that is your moat, and it isn't easily accessible across the internet, luckily trading at the end of the day is kind of like an art form, kind of. But we've made AIs that trade too, so I know they're gunning for us, So that's what you got to think about. You don't have the option. This isn't an alternative upgrade or something. That's the way I look at it. So make sure to write down in the comments all the reasons I'm wrong. And God bless, guys. I'll do another video tomorrow. I kind of wanted to cover those big trade ideas. Why I thought that, I didn't talk about the most important thing from last week. So what I think was the most important thing. Actually, so on Thursday night, I actually wrote up pretty early that I was looking for a sell-off on Friday rather, to become a dip buy moment. The big thing with this is that on the SPY, the 15-minute was rolling over, even as you were catching this bounce into the open, and the 65-minute was rolling over as well. Now, these often turn into great shorts. So there was a lot of tech names that were getting bounces into the open. I'm trying to think of which one I was really wanting to sell. I think it was AAOI. I preset these to sell off the open. I preset this one to sell, I think, for a 50% gain, or maybe this was actually a little bit more than that. Regardless, when I see this technical setup and I see this much more weakness into the momentum into the open, that's already telling me I kind of want to get out. The one thing that wasn't as concerning was the 4 hour was fine, so that's why I still wrote in the daily watch list that you might be looking for a buy the dip moment. Which we did get. You get the initial pullback, and then it did get a bounce. But we obviously stayed hands off for most of the day. I put some positions on, but I kept them small. I just wanted to see how the market would process this, and maybe we need Monday even to further clarify that of what are we doing here coming into the beginning of August? Are we going to be buying up tech and looking for a continued bounce? And then maybe when we hit a double top, we're going to see some selling that comes to bonds. Or are we just going to go straight into the bonds and try to collect? Because I think there's going to be inflows in bonds at these prices. I just think there is. I don't think we're going to see a waterfall from here, but if we do, we should probably be concerned about what's going to happen to equities, okay? Because there might be some major rebalancing. There already is. It's not as much as it was earlier since 2022 when the 60-40 portfolios kind of fell apart, right? Because remember, that was the third time in history where bonds stopped having inverse correlation with stocks, right? But there still is a decent amount of people that run the 60-40 portfolio. So if you do get a straight plunge on bonds, you need to be looking for more aggressive mechanical movements from equities to treasuries, right? To the bond product. So that's something else to keep in mind because those are very mechanical movements that occur in the market. So yeah, guys, a lot to think about. There's a lot of pieces at play, right? But keep in mind when we're even talking about those more complex topics, keep in mind how simple the actual execution is on the chart, right? Keep in mind how simple the Apple short was that gave 780% after the earnings collapse. And yeah, most of the position we made like 70% on it. It's whatever. When you're making 780%, you don't need a big position on. What are we talking about? We trying to get rich in one trade? No, we're trying to get rich over 100 trades to get the reps in, right? So it's and then we're looking for bounce levels over extensions on EWI, right? So I wouldn't get like too obsessed with the complex things. You kind of want to know them so that your fundamentals are solid. And so they're in the back of your mind when you're doing execution, because those can be moments where you're taken off guard by big events, right? And you need to know, because those are the technical breaking events, right? So it's good to have those fundamentals in the back of your mind, but execution overall is still just price action is king, right? Price action king. So hope you all found this helpful. It's a really long video. So please leave a like if you do, because it tells me that we have the attention span for some longer videos. And God bless. I'll talk to you all tomorrow.